Thank you all for joining us for the first session of Building an Inclusive Recovery, the Clinton Foundation's new series to address racial and economic disparities in the wake of COVID-19. I hope wherever you're tuning in from, you're staying healthy and safe. I'd like to begin by expressing my gratitude to our lead sponsor of this session, the Mastercard Center for Inclusive Growth, and our supporting partner of the entire series, Caliber Home Loans. I want to thank those of you who have already made commitments to action as part of this effort, including two you will hear more about in videos later in the program. First, from our longtime partner, Inclusive, which will increase access to solar energy financing throughout America, especially within Black, Latino, and Native American communities. And second, from Pacific Community Ventures, led by former Clinton Foundation staff member Bubal Gupta, which will expand a 2019 commitment to action to support the economic resilience of 3,000 small businesses and entrepreneurs with advisory services, specifically targeting businesses owned by women, immigrants, Black, Latino, and Native Americans. None of what we discuss today will amount to a hill of beans, of course, if we don't back it up with action. So I hope everyone will think of specific ways you and your organizations can make a real difference and partner with others to increase your impact. We all know why this meeting is timely and relevant. The events of this year have laid bare the many long-standing inequalities across our society, not just in health, but in access to quality education, employment, housing, and capital to start a business or keep one afloat. The painful truth is that a person's race still determines how they will be treated in nearly every aspect of American life. I have always believed you can't build a truly inclusive democracy and society without an inclusive economy. America can't succeed unless all our people have the same opportunities to do so. Even before COVID, the racial wealth gap had widened to the point where the median net worth of white households was 13 times larger than Black households and 10 times larger than Latino households. And with Black and Latino-owned businesses, small businesses closing at much higher rates than white-owned businesses, the gap is only growing wider. I've been working on these issues for more than 40 years now. As president, I signed the CDFI fund into law, created the empowerment zones, enterprise communities with a special emphasis on rural zones, and established the new markets tax credit, which is still helping to entice investments into low-income urban and rural areas. I've seen time and again how relatively small investments on things like expanding access to basic affordable banking, the ability to finance home ownership, or the startup capital for small businesses can have an outsized impact on people's lives and on the economy as a whole. But today, given the challenges we face, the efforts so far are too piecemeal. We need to keep working to build the kinds of national and regional networks and partnerships that will allow investments to have a bigger impact and achieve systemic change. That's why at the Clinton Foundation, we want to keep bringing people together from across the country and across sectors to help forge those kinds of connections. And why today we'll be highlighting proven approaches that are ready to be scaled and replicated. During these challenging times, mayors, community leaders, CDFIs, nonprofits, and corporations like Mastercard have been innovating new approaches to support businesses and communities. We need to continue to build on these efforts, especially for those who've been left out of the federal government's response. We're living through a period unlike any we've ever experienced. But the crisis gives us a chance to reimagine what our future should look like and can look like, what our society, our economy, and how we relate to one another will be like. We can look to the past for some lessons and then figure out how we can apply them on a broader scale. I'm really looking forward to the conversations and a productive meeting. Now I'd like to begin the conversation with my longtime friend, Ajay Banga, Chief Executive of Mastercard. Thanks for being here with us, Ajay. It seems like just yesterday, although it was almost 20 years ago, that we were working together in India in the aftermath of the earthquake to set up the America-India Foundation. Now we know, of course, that we need the same kind of grassroots development in the United States that you and I spent a lot of time working on in India and elsewhere. The last time we talked, we were across the table from one another. Now, the COVID epidemic has changed all that. So I'd like to begin with a simple proposition that everyone who's watching this conversation has their own story and their own group of people they're concerned about. Your company sits at the center of both a national and the global economy. Talk about what you think is the immediate and longer term impact on small businesses and what you think we can do about it.
Well, first of all, thank you, sir, for having me with you. And it's been a privilege to have had a chance to watch you do all the things you've done over the last couple of decades. I consider myself to be one of those fortunate people who came to this country and found a home here and then got a chance to help see history getting made over the last couple of decades. Your question about COVID and small businesses, I think that the impact of COVID has just laid bare the already underlying fault lines in where our challenges are as a society. It's brought them to the forefront. It's probably exacerbated them in many ways. But I think the issue is what the issue is. And that is that small businesses, first of all, right now, they are failing in large numbers. At a point of time when the crisis first hit, 60% of small businesses were not using electronic payments for a month at a time, meaning 6 out of 10 were basically closed for that month in the March-April period. That number is now down to 2 out of 10. So 4 of them have found a way to reopen in some way, but 2 out of 10 seem to be closed for quite a while. And estimates, as you know, are that somewhere about a quarter of these businesses may not reopen at all. And the impact of that quarter is much higher on businesses owned by women and minorities than on those owned by others. So I think that's the underlying fault line that's getting exposed through the COVID situation. So we've had a chance, I've spoken to you about this earlier, but I believe that the world's problems come in the 3 sides of a triangle. And I joke about that struggle to think of 17 problems. I could think of 3. And one of those is one versus many. Everything to do with inclusion. Racial inclusion, gender inclusion, economic inclusion, social inclusion. The other side of the triangle is humanity versus nature, all to do with our climate, our planet, our ecology. And the unfortunate fact that keeps the 2 sides of the triangle standing up with strength, because otherwise they would fall, is the long-term versus short-term trade-off that is the base of the triangle. That long-term versus short-term trade-off impacts politicians, governments, CEOs, companies. I think that's the issue that we've got to find our way through. So at Mastercard, you know this, we made a commitment, actually at a CGI many years ago, to try and reach 500 million people for financial inclusion by 2020. We did that. We've now gone to 1 billion, including 50 million micro SMEs and 25 million women entrepreneurs. And we've added to that over the COVID time period with a $250 million pledge for small businesses and a $500 million pledge for the Black community in America, starting with cities like Birmingham, where Mayor Woodfin is from, but working with my friend Vole at MoCaFi and with Andrea, who's been a steadfast partner for many years on trying to reach these disadvantaged communities through credit, through capital, through ways to go digital and online, through the advice they need to keep safe on cyber, as well as to get paid on time. And that's the kind of thing we're trying to do through this crisis. But I consider this to be quite a challenging circumstance for all small businesses, particularly those led by women and minorities.
Well, let's talk about that a little more. I remember when I was in the White House, in addition to the CDFIs, we also enforced the Community Reinvestment Act for the first time. And over 90% of the lending that had been done in the 24-year history of the act when I left office was done in the 8 years I was there, just by working with the banking community. And interestingly enough, this is relevant to today because after the 2008 crash, the people who criticized us for doing that said we had basically caused the crash by forcing banks to give money to places where they took deposits in low income and urban and rural areas. But in fact, the banks that were compliant with the Community Reinvestment Act, that were trying to help people at the grassroots, were less likely to fail. And as a result of that, 100 times as many people moved out of poverty in the 1990s as had done so in the 1980s. And I think it's very important that when the smoke will clear after the election and what will happen, and we'll all have to go on. But I think one of the things that's very important is that you and the mayor and Andrea and Wale and everybody that's got a voice has got to say, look, we have to focus on these women and minority-owned small businesses if we're going to grow the economy from the bottom up. And that's the only thing that really works. And we have a chance to redesign, it seems to me, the whole structure of how America's growth is triggered and animated and sustained. And I'm all for big infrastructure programs and many other things, but even the infrastructure program should include universal access to affordable broadband. We have to think of this in terms of lifting the many. And I think that we may never be the same in a good way if we do this right. I remember that, and you said this, you've been very concerned about the African American community in particular and how they've been left out and left behind. One of the things I am proudest of in my whole long life of public endeavors is that incomes increased after inflation about 18% when I was president, led by African American increases at 32% and Latino at 24%. And we didn't target them by race, we targeted them by income and opportunity. And I think that, and everybody was better off. One of the reasons I believe in immigration is that immigrants are more than twice as likely to start a small business and employ other people. And their crime rate's half the rate of the native born. So I think that, I know I'm preaching to the choir here, but perhaps you could say just a little bit about the specific difficulties that women and African American and other minority business owners face in getting access to capital. I'm very concerned about the numbers, about the number of businesses that have closed and the number of ones that seem unlikely to start up. And let me just say this, because I want to talk a little bit about the intersection of government policy and what you do. And then there was a real debate, a serious one in the government, including it with the Federal Reserve and Dr. Janet Yellen, about whether we should redesign our support programs. And we've had, one very large one, and then we need another one now, but whether we should redesign them to work more like Denmark or Germany or some other places where they actually put money into the businesses to sustain them on the condition that they would maintain employment at roughly the same level that their employees would have gotten had they been on unemployment plus the extra government assurance. They decided not to do it because it would foreclose the option of people starting new businesses, and because they were afraid after COVID, many of the businesses which had been successful wouldn't work in whatever the new economy is. But we have to think about that. What's your take on what we should do now to influence policymakers and to influence other people who are in the position that you're in? people at other companies that provide credit, people at banks. How should we be thinking about designing our approaches so that they build a more inclusive economy than we had before, and certainly than we have now?
Well, so, I mean, the facts are the facts around both the access of women to capital for opening businesses and the access for minorities to capital for opening businesses. If you look at the number of black-owned businesses that apply to banks to get capital, only about 25% of them get approved, whereas in the case of white-owned businesses, 60 plus get approved. Some of that is caused by the availability of credit scores and collateral. But it's not just that, because even if you go underneath that and you look at people with good credit scores applying, you'll find that about 30-40% of the black applicants with good credit scores will get the full amount of their loan, while close to 70% of white will get the full amount of their loan. So we have a fundamental issue with the manner in which risks are assessed and loans are given in the mainstream banking system. Part of that is caused by the manner in which banks are evaluated and assessed for risk capital by the regulators on how they lend. And so when people like Andrea's organization start getting involved with this, they look at it very creatively. They look at not what you already can provide as a score or collateral, but what they call social capital, meaning will somebody else stand up for you, give you a small loan, report that to the credit agency, and begin to build a credit history for you. That's creative, it's thoughtful, it's inventive, it uses data and AI. That's the way to do it. I think banks can do that too if we incentivize them through both policy and regulation to go in that direction. But that's just one aspect of it. Another aspect of it, even if you were able to get capital, and I'll give you a couple of examples of what we are doing in that space later. But if you were to get capital, you still have to go digital and go online. As you've seen, if you're not online right now, that's a hard business to be in. Most people don't understand how to do that. So you've got to help them get the tools to be able to go online for their business, find a way to get paid, find a way to fight fraud and cybersecurity, and you've got to get them the advice to do all that. So what we're doing, as an example, on capital, is to work with organizations like Andrea's, people like MoCaFi, but also a lot of organizations overseas as well, where we're trying to get them to use transaction history to underwrite for credit. And that's the best way to underwrite. The hot dog vendor on our street side in Manhattan probably has a $2,000 a day revenue from selling hot dogs. But if they're all in cash, nobody will give her or him a loan. But if you were able to underwrite that transaction flow, you'd be able to lend that person money to open a second stand or maybe a third one and employ two people. I think that's the genius of this method that needs to come through. We're doing that in a number of countries around the world. It works. It actually delivers numbers that are better for the banks, better for the borrower, and better for the community. Another example is to get them to go online. We've launched something called Digital Doors, which works with Shopify and BigCommerce and gives everybody the tools to be able to take their business online, including how to get paid quickly, and then we give them free tools for cybersecurity. And then we provide them with networking opportunities on things like with Hello Alice or with others of that type, Create and Cultivate, where women entrepreneurs find a way to meet others like themselves, people like Andrea, who can inspire them to become something more than what they are today, to have a way to get to that. So I think you've got to attack it in all those fronts. So you've got to attack it on the regulation and policy around getting capital. You've got to attack it on getting them to go digital. And you've got to attack it on finding them networks to get access to the right kind of technical assistance as well as mentoring that they can then participate better in the economy.
Thank you. I wanted to emphasize what you just said, because while we definitely will wind up having to spend more money at a time when the economy's in negative territory and interest rates are 0 or less in effect, there are regulatory changes that could be made by the bank regulators that would overnight make a big difference in the amount of capital available to small business people, including minority-owned businesses and women-owned businesses. And I just don't think that when President Obama was in office and the crash occurred, first we had to dig out. But by his second term, they started trying to enforce the Community Reinvestment Act again, and we had more balanced economic growth. This is not a complicated thing. We could make it better, and then you could have something to really build on. The next, talk a little more about closing the digital divide and for businesses and what you're trying to do about it. It's much more important than people know, especially if you want growth to occur in smaller and more rural areas.
Absolutely. So I think, again, COVID's exposed the nature of that digital divide. But I think we've got a few places to go tackle it. The first basic one is affordability and access. I mean, yes, computers are expensive and the like, but there are ways, again, with policy to help bring those prices down for disadvantaged folks. Access, which is a challenge around the world. 250 million women compared to men lack access to the internet. Part of that is exposed in their ownership of mobile phones. And that's something that we really need to take on. But so affordability and access is one front. But the second one, more basic, is infrastructure. And you referred to it when you started the session, talking about expanding broadband in rural areas. And I think that's mission critical for what we are doing. Fortunately, new technologies are finding ways to get to expanding that broadband through satellite or through balloons and technology of that type as compared to cables, which by the nature of the beast is more expensive. So I think there's a lot of work going on in that space, but money needs to flow in to enable that to get executed. And I think the final piece there is to do with education. When I served on President Obama's Cyber Commission, one of the things I learned was the absence of cyber knowledge and digital knowledge in our schools is actually quite frightening. And if we were to build that knowledge and capability right from the beginning, K to 12, we can transform the way that minorities and women get a chance to participate in this, not just from education, sir, but it's also from the viewpoint that even if I'm educated, I'm scared about my data and its privacy when I'm on the internet. And I need to get both those sides, both those things toggled together. One of the things we're doing at Mastercard, actually unrelated to this topic, is some years ago we launched the ability to go for Girls for Tech is the program. We've now reached 1 million young girls to make them understand how technology is their friend and how they don't need to be concerned about it, they can master it. And now I've put a program in place to reach 5 million by 2025. My hope is that 5 million girls with an attitude towards STEM that tells them they're as good as any boy out there, that changes the world. And so whether it's the infrastructure or the access and affordability or education, I think we need to tackle all of those. And in that education, sir, is the fact that we must get citizenship to be exercised through the internet. If I can do things on the internet which allow me to participate in my community as a citizen, I will use it much more. And I think getting people to get involved with the internet as a form of citizenship is kind of really important as a part of this whole thing. Years back, sir, I made a speech at an event saying that we cannot have the internet of everything without the internet of everyone. And I believe that to be mission critical over the next decade, if you're going to take advantage of the power of this technology to help to democratize the level, sort of levelize the playing field for people.
One of the things, and then we'll wrap up so we can get onto the panel, but I'd like for you to comment on this. I now have 3 grandchildren, and 2 of them are in school. And we're in New York, where, as you know, it was really bad, and now it's much better, and we're worried about a resurgence like everyone. But they're, for their ages, remarkably computer literate, but they get, good equipment, and they have good good instruction, and everything's fine. But it occurred to me that we may need, since we don't know what's going to happen to the schools, we don't know whether we'll be opening and closing and have all kinds of disruption. If we set this up right, it could be a real opportunity to educate a whole generation of Americans without regard to race or income or gender about the empowerment technology can give them to seamlessly continue to live their lives. If we don't, it's just going to be one more bump in the road of inequality. And I think that there's not been enough said about this, but one of the reasons that in cities all over America, mayors like Mayor Woodfin and others, excuse me, I'm hoarse today, they're worried about not putting people back in school because they know some of their poorest students, income-wise, are the least able to access any kind of distance learning, even on the most rudimentary level. And it's going to be interesting to see how public safety concerns intersect with the inequality of access to technology as we try to start education again. Whereas, you know, if everybody had it at a high level of quality with proper instruction on how to maximize it, we could seamlessly move in and out of more physical contact or less based on what the health considerations are for the next year and a half. And it gives us a chance to lay a whole different foundation for the future if we do it right, it seems to me.
You're absolutely correct, sir, as always. The other angle of this, of course, is that all the challenges we face with zoning and the right kind of money being put into schools in different zones, all that gets solved if you allow children to access distance learning, when you can help to level the playing field on the quality of education they get, irrespective of the zip code they happen to have been born in. So this could be an opportunity of a fairly unique type over the next decade. If we can actually crack this nut of how to get access to affordability for this generation. When you started talking about the American India Foundation, which you helped to launch years ago, one of the things they've done really well is what they call digital equalizer, exactly what you're referring to. They've got tools distributed to children in schools. And it's amazing, sir, without education, you give a kid an iPad or a Surface Pro and go away and come back in a couple of days, and you'll find them playing with the Surface Pro, having learned how to access the internet and search for things that interest them. And I think the natural curiosity of a child who can understand this technology is actually one of the tailwinds we could use to our benefit if we get the infrastructure right and the affordability right on getting these tools out to people. I would say if you talk about an infrastructure spending program, which, back to your point about fiscal policy, we've got lots of monetary policy working for us. I think the central banks have done a pretty good job this time around. Fiscal policy, we need some more thinking on. And one of the things we do need is infrastructure, not just physical, we do need that, but the digital infrastructure that will enable for this level playing field that you just talked about.
As I think in the time of COVID, it's more important even than upgrading our physical infrastructure.
Yes, sir.
This is an opportunity for us to do something that we've never done before.
I would agree.
And it's
and I think COVID gives us the opportunity to think about this outside the box. And shame on us if we don't seize that opportunity.
Ajay, thank you again for all your work. And since we have to wrap it up, let me end by asking you as briefly as you can, how would you define success with regard to inclusive growth? You say you've got a whole initiative now on inclusive growth. What will be your definition of success?
Well, first of all, sir, thank you once again for the opportunity to be with you. We've got very clear metrics ahead of us. We want to reach 1 billion people and get them into the financial mainstream so they can get access to credit and insurance at a reasonable price, educated correctly about it. We want to get 50 million micro SMEs enabled digitally, and we want to include in that 25 million women entrepreneurs, all by 2025. That's our definition of what we and our partners can do together to make something happen.
Thank you. And now we're going to move to a panel where we can discuss people who are actually trying to do that. I'm very grateful to you. Thank you, friend.
Thank you, sir.
Pacific Community Ventures is a 22-year-old community development financial institution in California that empowers underinvested small business owners to address racial and gender wealth gaps in their communities through a good jobs, good business model, combining our affordable lending capital with our pro bono businessadvising.org platform. In 2019, PCV committed to supporting 1,500 small businesses nationwide over the coming year, and we've reached almost 1,000 already with free expert advice valued at over $2 million. Given the COVID crisis, where we've already seen 45% of Black-owned small businesses in California go under, we've worked hard to launch our new small business support circle with corporate and foundation partners to provide this expert advice for Black, Indigenous, entrepreneurs of color, immigrants, pivoting their businesses, refinancing, and reopening safely for their customers and workers. Today, PCV is expanding our commitment to reach 3,000 small businesses over the next 3 years with support from our partners and by working with fellow CDFIs like Hope, LISC, to leverage our platform to reach their clients. We're also excited today to announce that Appalachia Community Capital will be joining PCV's circle to bring this advising to their community. Please join us.
Hi, my name is Kathy Mann, and I'm the President and CEO of Inclusive. Inclusive is a national network of community development credit unions dedicated to promoting financial inclusion and economic revitalization in underserved communities. Solar energy can be a powerful tool to drive this economic revitalization by building energy affordability and reliability. Solar provides a business opportunity to invest in a proven technology with decreasing costs and high impact. But low-income communities and communities of color have not been able to equally access solar energy investments, and there's a real risk they will be left behind. In order to address this challenge, Inclusive, in partnership with the University of New Hampshire's CARC Institute, commits today to create accessible training programs and shared capital platforms so community finance institutions are positioned to offer solar finance in low-income communities and communities of color. The estimated total value of this commitment is $1.7 million over 3 years. As a result of this project, we will provide solar lending and program development training and support to 120 lending professionals in 30 community finance institutions. These institutions will deploy at least 180 solar loans in their communities, almost a third of which of these loans will reach low-income households in communities of color. These solar installations will lower utility costs and greenhouse gas emissions while helping communities build a more resilient electrical grid in the face of increasing natural disasters caused by climate change. To learn more about this work, please join us along with the Clinton Foundation on October 28th at the Inclusive Annual Conference for a virtual plenary on climate change and equality, the role of credit unions to make clean energy accessible and affordable. Thank you.
First of all, let me thank all of our panelists, the mayor of Birmingham, Mayor Randall Woodfin, Wally Coxon, who has founded Mobility Capital Finance, or MoCaFi, and Andrea Jung, who now, for the last several years, has run Grameen America, investing in over 129,000 women entrepreneurs. I want to begin by asking the mayor how Birmingham's doing. The city of Birmingham's population is well short of its original maximum. It's about 70% African American now. The county, the larger Birmingham area, has about a 28% Black population, with Black people owning only 3% of the businesses. And that's just one of the problems you've got now. So tell us how you're doing. How have you been specifically impacted by COVID? And what are some of the things you're doing to try to respond?
Thank you, Mr. President. You know, as mayors, we have been dependent on each other, talking to each other across the nation. And that's because we have not received the support we've needed currently at 1600 Pennsylvania Avenue or from our state capitals. That being the case, all of us originally dive in head on as it related to how do we solve for the health crisis, making sure every decision we make, we can save lives and not have a run on our hospitals. But related to businesses, related to small businesses and how to support them, by late March, what we realized was that the risk to our small businesses was so high, we had to take swift action to create an emergency loan program because we didn't know when federal help would come or state help. That emergency loan program we created locally was called the BHAM Strong Loan Program. That was in partnership, of course, with the private sector. We received about 1.3 million raised from the private sector to match our city's 1.2 million seed fund. That allowed us to save at least 90 businesses and around 700 jobs. But there's another component, Mr. President, and that was to create a service core program. The whole idea was it wasn't just about saving small businesses, but we had to find a way to support those individuals who had been laid off as well or furloughed. That being the case, the Birmingham Service Corp enlists Birmingham residents who have been laid off pretty much as paid volunteers to work on projects that met the needs of our community related to COVID-19. And so consider the Service Corps members engaging in examples such as local nonprofits for COVID-19 outreach by connecting our residents to CARES Act resources. In addition to that, helping to organize the organization's monthly food bank. Another example was that we created a call center to provide small business owners guidance about CARES Act. So these individuals who have been laid off were able to have supplemental income by helping others. Another example was that they assisted in directing traffic for one of the larger COVID-19 testing sites. And then I think one of my favorite examples was these Service Corps employees also assisted the Birmingham Education Foundation and the Birmingham City Schools in the distribution of school supplies to about 42 Birmingham City schools. All of this was to find ways to offset the losses, not only for the small business owner, but also for the hourly worker that was furloughed or laid off. The bottom line is there were other things we had to do. And so we forged a partnership with Goldman Sachs as well for their first time investment in our city. Now, this partnership with Goldman and Hope Credit Union allowed us to engage about 99 protected loans, that is, and an estimated about saving 900 jobs. The whole effort is to prioritize minority, women-owned, disadvantaged businesses with non-traditional banking relationships, and we had to do that as a city.
How much longer can you continue to do this? Can you institutionalize it or without budget help?
We can't, sir. Our city, like many cities, is facing an extreme deficit. Our city is facing a $63 million budget shortfall. And the truth is, what's concerning to us as mayors is that we've watched in several of the CARES Act funding be distributed across our country. Many industries have been bailed out, sir. Many. I feel like all of them have been bailed out except cities. And for the existing CARES funding to receive, it was stated that cities can't use it for budget shortfalls, as well as our private sector who partnered with us. They're shortchanged as well because the economy is affecting them too. So we are running out of gas, if I'm being very honest with you.
Well, I wanted to emphasize that because I believe that there is a lot of energy for innovation in America's cities, and not a small number of states are reexamining their economic policies and what they can do to, if you will, democratize economic opportunity and empowerment. But states and cities have limited borrowing capacities and have to essentially run on balanced budgets, and they were insufficiently provided for in the first round of relief that the Congress passed. And
Yes, sir.
there are all kinds of reasons for that, but it doesn't make a lick of sense, because the last thing we need to do is to drag the economy down now with a bunch of tax increases, and all it will do is drive people away, and they don't have the money to pay anyway. So I think that I wanted to emphasize that. I think that everything all the rest of us are trying to do, including our other two panelists here, depends in part on maintaining a reasonably healthy structure within cities and states. And this has been a massive oversight, I think, by Congress. And I don't know what else to say, but it's just simple. The reason that we're not in worse shape, as AJ mentioned earlier, is that the Federal Reserve has done all it can do to keep liquidity flowing in our system. But now we need the government with fiscal action to do the same. And in the way it's set up, you don't print your own money in Birmingham. Unless we're going to allow cities and states to have their own mints. Think about that, the Birmingham Mint. You can have a Birmingham buck. Since you can't do that, we need more help from the federal government. But I do think it's I wanted to give you a chance to outline what you've done, and I'll come back to it in a minute, but it's very impressive, all these initiatives you've taken. And I think, as you pointed out, mayors all over the country have been working together and trying to come up with similar ideas that work for their people. So you
Sure.
get the best of our laboratories of democracy, but sooner or later the money runs out and someone else needs to step up. Wally, I want you to talk a little about, you've had an interesting career, and your work at Mocafy is interesting to me, but I think it would be nice for all of our listeners, just for you to have a chance to say, tell us what your business model is, how does it work, and what unique contribution can it make to dealing with the post-COVID economy?
This environment, Mr. President, requires innovation, as you talked about. And the innovation in 2020 is one where we need to create new business models for underserved communities. And Mocafy attempts to do just that. We're in a moment now where we have the ability to create a branchless bank infrastructure that allows someone who may be a transactor and not a saver to get a high quality banking product and have real opportunity to use data as a way to improve their credit. And that's what Mocafy does. So we've created a platform with FDIC insured accounts. We've transformed the stores where people live, the Walmarts, the Duane Reeds, the Rite Aids, the dollar stores, into bank branches. I don't know if you know this, but 80% of the bank branches that have closed in this country have been in low and moderate income communities. 55% of African Americans are either unbanked or underbanked in this country, and it's 50% for Latinx Americans. And so we have decided, let's create a mobile first platform. Let's use the stores where people live as bank branches. Let's give them free check deposits so they don't have to go to check cashers anymore. And if you have a high quality product like that, then we can start to reach a population that has otherwise been relegated to the really expensive alternative financial services products. So we're starting with consumers, and we've got a wonderful strategy focused on small businesses, and we're doing it in solidarity with Mastercard. And this last thing I would say is, it's not just enough to have a high quality product that is direct to consumer. We've taken a step back and really building off of some of the great work you've done, Mr. President, working with mayors like Mayor Woodfin. We're working with cities now to take our infrastructure and marry it with the city infrastructure so they're in a position to provide dollars to vulnerable communities, as well as create a mechanism for folks to pay for fines or other things. And now we have a way to bring everyone into a strong financial position. So that's the MoCaFi model, is to build those. I think of it actually as another form of infrastructure, banking infrastructure, that has been left behind due to a market failure with the more traditional banks. And MoCaFi, through its technology, is trying to innovate around that.
So where do you go from here? What else do you need? What kind of support do you need to expand that? Because essentially what you're saying is you're providing direct financial services that were previously available only through institutions, and people were dependent on their policies and what they were doing.
That's exactly right. What we'd love to be able to do is, particularly with the supporters of the Clinton Global Initiatives, is figure out a way that we can bring our services to places like Birmingham and places like Baltimore. If you look at places like Los Angeles or Dayton, Ohio, where you sort of see where some of these communities, folks are operating in cash. I don't know if you knew this, but the average African American spends $40,000 over his or her working lifetime in excess banking fees. Just imagine if you were able to turn that to zero and take those dollars and invest it at a 5% return over that same period of time. That individual would have enough money to close the wealth gap that you so articulately described earlier in this conversation. So we would love to partner with different folks that would allow us to go to Mayor Woodfin and say, Mayor Woodfin, we've got a banking solution for your small businesses. Oh, by the way, so many small businesses weren't able to get access to CARES Act funding, particularly Black-owned businesses, because they operated in cash and they couldn't demonstrate that they had the records that would allow them to qualify for that meaningful subsidy. So we have a chance to change the game on that in an environment where cities like Birmingham and others are struggling in terms of trying to balance their budgets responsibly, to be able to come to Mayor Woodfin and say, hey, we've got a solution for all your individuals and all of your small businesses so they can be banked. That would be a game changer, and would love to be able to partner with people to make that happen.
Thank you. Andrea, you've had, to put it mildly, I think, a very interesting life and career. And in your previous life at Avon and now at Grameen America, you may be responsible for helping to lift more women entrepreneurs than anyone else, and certainly in our country. But I want you to talk a little about it. Tell us about, first, for people who don't know, tell them a little about Grameen America and how it was inspired by the model of Muhammad Yunus and the Grameen Bank. How do you focus on getting credit to more people and making loans that are too small for most banks to make?
Thanks for having me, Mr. President. It's just great to be part of this conversation like the mayor and Woolley. I mean, this is just so critical as we talk about a just recovery. So Grameen America has given out now over 130 million women, $1.6 billion of loan capital. And this has been modeled after the Grameen Bank, which in Bangladesh, in the poorest country, if you would, on earth, was able to use microcredit to be able to give those in poverty the opportunity to have an equal right to capital. And interestingly, Grameen America was born in 2008. You mentioned in the beginning remarks that, that was obviously a global crash, a credit crisis. It didn't have the health aspect, and I'll talk about 2020 and the pandemic in a minute. But where we think about innovation being born out of crisis, hopefully Grameen America is an example of that. There's a structural inequity and a structural issue with women, with low-income entrepreneurs of color getting access to capital. 4% of entrepreneurship capital in 2018, $1 out of $23 went to women. And if you look at our tier, the number was hardly registering. So the opportunity to give women the opportunity to have access to capital, to build their own credit scores, and to have an ability to be banked is critically important. 1 out of 2 women-owned households in this country are unbanked, and that is unacceptable. So born in 2008, the program did extraordinarily well, and 99% of these loans are repaid. These are non-recourse, non-collateralized loans to the, quote, traditionally formal capital markets would say not creditworthy. And these women entrepreneurs have paid these back at nearly 100% because they are truly grateful, and the formal traditional system doesn't give them access. So it has been a terrific, innovative solution to get capital out where it's needed when the system hasn't worked for them. If I fast forward to now, I mean, this has been both the most heartbreaking but also inspirational year, because we all know that there's been a disproportionate impact health-wise and economically on our members and our target entrepreneurs. We do a survey every Friday, and we've been able to track this from March through now. And in the beginning, in March and April, 25% of them were either affected themselves by the virus or someone close to them in their family was. Nearly 40% of them were looking down food security issues. And 80 to 85% of them were concerned that their businesses wouldn't really last through the summer. That obviously was extraordinarily heartbreaking. Many of them, most of them, were not able to access any of the stimulus packages and PPP. And I think that, we're all seeing this, I'm sure, in terms of low-income minority entrepreneurs. So we were able to quickly establish a lifeline to them. In the last few months alone, we've given out $100 million of loan capital, over 35,000 rebuild and recovery loans to help these women get back on their feet. And I think what's been inspirational is these entrepreneurs, as I know all of us know, immigrants, low-income entrepreneurs from Black and Hispanic backgrounds who are driven with the American dream. They are so resilient. They're anxious to get back on their feet. They're buying the PPE for their businesses. They're learning how to open their restaurants at 25% capacity and get themselves back up and running. And so that part has been extraordinarily inspirational.
Thank you. I want to ask some more questions about it, but just for the benefit of everybody who's listening, most of you probably know about the original Grameen Bank, and that Muhammad Yunus won the Nobel Prize for Economics a few years ago because of it. And he said, when they gave him the prize, the guy from the Nobel Institute said, maybe Bill Clinton will stop calling me now. Because I thought that this was so important. I campaigned literally for 6 years to get him the prize, but he and BRAC both started out of South Asia by Sir Fazal Abed, who sadly just died, another wonderful man, are the biggest microcredit institutions in the world. But starting in the early 80s in America, there were people who took notice and tried to model it, and beginning with what was then called the South Shore Bank in Chicago, where the whole neighborhood was about to disappear, and there were a lot of unemployed Black carpenters and Croatian electricians. And basically, the South Shore Bank did what Grameen does. They made them independent small business people, loaned them money, saved the South Shore, created successful lives for these people, and had a model that when I've ran across it with Hillary and I in the early 1980s, we set up the first rural microcredit bank in America in Arkansas, and it's still thriving. So I'm sitting here thinking, and maybe we should go back to the mayor real quick, and then the three of you should talk, whether there is some way to merge what Grameen America does with modernization and easy access Wallet's trying to establish, and the need the mayor has to tap sources of capital while he waits for the federal government to do right by him. Maybe you could talk, for example, Mayor, about this vital program you started to promote economic inclusion? And is there some way that we could figure out how to merge all these efforts in the COVID recovery so that America will look totally different? We could make a lot of the unresponsive institutions almost irrelevant to America's future if we could get enough funding to flow through the efforts that are represented on this little screen today.
Yes, sir, Mr. President. Well, first, let me answer the question by stating, yes, I do think there's a possibility that they can merge. But I think it's important that I at least set this answer up by giving some history and facts of Birmingham. Birmingham is America's fourth largest majority Black city. So revitalizing our economy starts with, the simplest way I can put it, revitalizing our Black community. In Greater Birmingham, Black people, as you stated earlier, constitute 28% of the population, but own just 3% of businesses. And that is unacceptable. And that represents, unfortunately, the largest racial disparity in business ownership among metro areas with more than 1 million people in our country. I mean, literally, that's just unacceptable. And so doubling Black business ownership rate would create at least 500 new businesses in the region, but it also add more jobs in our community. And so we have to recognize the power of expanding our bench of minority and women-owned and disadvantaged businesses. So the whole idea of Vital, we start with this concept of investing in local suppliers, people of color and women, because that adds richness and it adds a depth to our community while adding jobs. But I think it's also promoting entrepreneurship, as well as supporting small businesses for the long run. I mean, because your question was about the long run. And so in late June, I partnered with the CEO community and the presidents of 11 Birmingham corporations. And they joined me in a pledge to leverage our purchasing and procurement power, because we have that power to create economic opportunities for minority and women and other disadvantaged business enterprises. So Vital, it's the whole concept. The city of Birmingham, what we're doing is challenging local companies and institutions to join the city of Birmingham in measuring what we value. If you say you value something, you should be in a position to measure it. So what's one of the best ways to do that? Publish an annual performance report on your spending with women, minority, and disadvantaged businesses. So a few months from now, beginning in January of 2021, we will work with partner companies to publish a report to the Birmingham Business Journal. This is a public documentation that comes out on a weekly basis. But our first report will establish a transparent baseline for us to improve upon each year. Now, I'm not a fool. I think we know with this first report, that first report will show lots of room to improve upon, because it won't be ideal numbers of engaging and supporting minority and women on. But if large and mid-sized employers, as well as city governments like ours, collectively commit to doing businesses with women and minority-owned businesses, then without a doubt, we will create a more robust and inclusive economy. You know, these reforms need to be underpinned by more transparency, but transparency needs to be supported by better data. But better data needs to be supported by proactive engagement with all the stakeholders. So we can no longer afford to stifle the imagination of a new generation of entrepreneurs. Mr. President, that's probably the best way I can answer your question.
Well, I think it's very important, because there's going to be an enormous opportunity today and going forward to get the private sector to do what the government should also do in contracting as we come back, which we used to call affirmative action, and the Supreme Court gave us some limits in a case called Adirondack more than 20 years ago. But I refused to get rid of it, because I knew that the disparities are there, and they'll never go away until we find systems that can prove that it's actually profitable to invest in people who've been left out and left behind. So, Wally, what's your reaction to what the mayor said? Is there some way that we could take what Grameen does, what you do, what he's trying to do, and create a seamless post-COVID grassroots economy that would grow from the bottom up?
Absolutely. I think this is the opportunity to fill in the gap where the major institutions have not served their community. So just imagine the power. I mean, what Mayor Woodfin talked about in terms of the population of Birmingham, a rich city of rich history, 27% Black, 3% of the businesses are Black. We know that Black entrepreneurs hire in the community and drive economic growth. So the plan is very simple. What if we made small business accounts and individual accounts, so individuals that are appropriately priced, have the great services, FDIC insured, make them available in Birmingham to both individuals as well as small businesses? We can take spending behavior in partnership with Mastercard and start to create appropriate credit visibility so we can deal with the credit score redlining that exists in our communities. And then once we have good information and people have safe accounts where they can put their money, we can then work with Andrea and her team at Grameen and say, you know what? We have a goal. Now that Mayor Woodfin has baselined the number of businesses that he'd like to create, and we can even look at some of the spend data and figure out, hey, in some of these different neighborhoods, right next to the Birmingham Civil Rights Institute, we should put a Starbucks. We should not forget Starbucks. Maybe you put in a mom and pop local bakery and deli. And so we can start to provide people with the tools to set up that business. We can work with Grameen America and get the funding. We can work with Mayor Woodfin to find the entrepreneurs. And I think we can have a very robust ecosystem. And I would love to challenge us to see in a 5-year period of time if we can take that 3% and try to double it to 6% just in Birmingham with the three of us on the phone right here today.
Andrea?
Here, I think that we have to put on a very speedy course collaboration. I think one of the positives, and it's hard to say positives because there's been so much negative that's come out of the pandemic, but I think that the speed of things that used to take 10 years or 5 years being done in 1 month and 2 months now is one of the positives, because I think everyone realizes, I mean, this is the time. I mean, the systemic issues have to be dealt with, and if they're not going to be dealt with now, they never will. And if not us, then who? So I think that there is a huge opportunity. There's so much conversation about making sure it's a just recovery and an inclusive recovery, but there will not be a recovery at all if women and minority-owned businesses aren't included. The math just doesn't get you there, and we have an obligation to do that. I think there are existing, whether it's CRA, CDFIs, I think we just have to put that on steroids. We have to amplify the opportunity. I think when you look at CRA, a lot of it is going to low-cost housing. That's very, very important. But how do we move it towards women and minority-owned loan capital? How do we get CDFIs more included in these packages and quicker from a process point of view? Because with the collaboration, Birmingham, we would love to come to Birmingham. I think it's a big opportunity, but how do we take something that might take a couple or 3 years, make sure we get the capital quickly? We've got great partners. People like Ajay and Mastercard have been enormously helpful. So I think this whole public-private partnership on steroids now to do something very quickly so that the state of play is extremely different in the next 2 years than it has been in the last 20.
I think, we've got 30 years now of experience that you could say, well, that doesn't bear any relationship to what we're facing now. But the truth is that the experiments, which were just that, and never carried to full capacity in democratizing capitalism and reaching out to poor communities, to women and minorities, to become business owners, they proved, even under those circumstances, that the economy worked better. And that if you grow it from the bottom up, you get more rapid growth and everybody does better. I mean, if I may be wrong about this, but I seem to remember that after the crash in 2008, for the next, by 2012, women-owned businesses had added 1.8 million employees, and businesses owned by white men had lost 800,000. Now, I don't think that means that white men were incompetent business people. I think that means that the women-owned businesses were going into areas where there was economic opportunity and which had previously been underserved. And the same thing is true on minority-owned businesses. So I'd really, I'd like to use the remainder of time. We've got 6-7 minutes. I'd like for you to make your pitch. If you could, how would you define success over the next 5 years? And what are the 2 or 3 things that all of us watching could do to help you? Mayor?
Well, Mr. President, since we have a short time, I'm going to be very short with my answer. It's easy. Buy local. Support your small businesses. Educate yourself, and let's see, know the influence your community dollars have in supporting our minority and women-owned businesses.
Let me just say one other thing, because you talked about how you're going to now publish all this in your local business journal, and how you believe in transparency. I'll give you an example of the power of it in another area. When the Affordable Care Act passed, the Obama administration tried really hard to get a lot of transparent data about hospitals, hospitalization, the price of various surgeries, all that sort of stuff out there. And there was enormous resistance. But one place had done it on its own for years, and it was sort of normal. Pennsylvania began years ago publishing data on surgeries and other medical treatments in hospitals by hospital and by price. What did they do? How many things did they do? How much did they cost? And what were the results? And they found out something that just makes sense, but it could have, if we were totally transparent, could have a transformative impact on healthcare. They discovered that the price of what you paid for a procedure had no relationship to the quality of outcome. That the most important determinant was how many of those things did the hospital do. And the more they did, the better the results were. And you will find things like that if you keep pushing this transparency thing. All it will do is show over and over and over again that growing your local businesses will have more economic benefits and will benefit everybody else, including the bigger businesses in the area, if you do it. So, Wally, what would you say? What 2 or 3 things do you think the rest of us should be doing that could most benefit you, and how would you define success?
So I think I would first define success if we're able to address this lack of banking services, core banking products for small businesses and for individuals. They don't have to go to the check cashers, the payday lenders, and the pawn shops for their basic banking. Ideally, we'd love for them to do it on the Mochify platform in partnership with cities like Birmingham, where we can turn around and say, half the businesses, for example, that operated in cash now operate in the digital economy. That would be success for me, 1. 2, I would love for us to be able to take the transparency that Mayor Woodfin is putting together and be strategic with that information to say, what are the 3 or 4 industries that are growth industries in Birmingham, and how do we put capital that could come from Green America? And I think we need equity capital as well. And with some of the data that we can get from Mastercard to say, let's put some equity and debt capital together to the tune of $50 or $100 million in Birmingham, and let's create 50 new businesses that are really going to transform the economy there and accelerate the growth. And the final thing that I would say is I think very strongly that we need to, in creating strong entrepreneurs, also need to create opportunities for individuals to purchase homes. And I still believe quite deeply that entrepreneurship as well as home ownership are 2 of the major levers to drive economic growth in this country. And so, as we're helping the entrepreneurs grow, we should also make sure that as we get our communities banked, we're getting them credit scores reported so they can go out and purchase homes and drive economic growth that way. And I think it's all there. I think all the people on this conversation today with the folks in the network here, we can put our heads together and make that a reality. And I think we would be very proud of the impact and carry on the great work that this group has been focused on for so many years.
Andrea, what 2 or 3 things do you want done, and how will you define success?
Well, just starting with how would I define success? I mean, I think if women, the facts are there that if women participated equally as entrepreneurs, global GDP could rise 6% and double the global economy to $5 trillion. And if you took the percent that would be impacted in the United States, it's just so huge. So again, just having equal participation for women and minority entrepreneurs mathematically is extraordinary in terms of the recovery as we look forward. That would be success. What do we need to do? I think we need to take the success that we, Grameen, and others have had, but if I just speak to Grameen, we've proven it. I think to your point, Mr. President, it's been 12 years. There was a lot of skepticism about whether small loans to women who didn't have a credit score or wouldn't necessarily be able to participate, would that be something that would work in the richest nation in the world. It works in Bangladesh, it works in India, it works in Africa. It's not going to work in the United States. 12 years later, it's been proven that it is fundamental. It has changed women's lives. And when women earn a dollar, they change the lives for their children, for the economy, for the community. So that's been proven. We need a tremendous amount of capital, both from the public sector and from the private sector, to be devoted to access to these entrepreneurs. We've served 130-something thousand women. It's extraordinary, but there's 43 million people living in poverty in the United States alone, and that number is only going to look worse after 2020. So how do we get this to massive scale? And to your point, well, how do we take Birmingham and not make it a nice little project, but get it to scale in the cities that need it the most and do it quickly?
Thank you. I don't know who's listening to this, and I don't know whether we'll be heard, but I know this. I have personally spent, as I said at the beginning, more than 40 years of my life trying to figure out how to have more equitable economic growth and inclusion, including women, minorities, people with disabilities, all kinds of things. And even when we did things that were big, it always felt like we were operating around the edges because the people for whom the economy was working fine were willing to do something, but not to basically reorganize the model. We have been knocked flat of our back now. And we have an opportunity as a result of that to get everybody to reimagine the future. If I were running a big bank, I'd be trying to figure out how I could hook into this and take it to scale and make money in a lot of different places in a small way instead of just trying to look for the big payoffs. That everybody is going to be thinking a little bit differently. And so we have opportunities to build partnerships, to cross political divides, ideological divides, and, the divides of economic understanding and appreciation of the discrimination that women, blacks, Latinos, minorities, first-generation immigrants have faced from the get-go here. We got a chance to get people to reimagine the future. And I thank all of you for what you're doing. And I just think anything that we can do, anything, to make people understand that we have, if COVID went away tomorrow, the challenges of climate change are going to support more local businesses. All these other challenges we have, I'm telling you, you have got a chance to be part of a sweeping change in the way America does business. And I hope we make it. And if we do, it'll be because of people like you. So please stay at it. I hope all of you who are listening will support these folks as you can. I thank them for what they're doing, and I hope we can shed some more light on their efforts as we go along. Good luck to all of you, and thank you.